You've had 2025 circled on the calendar, but now tariffs, federal layoffs, market volatility, and you're asking yourself, is this still a good time to retire? Today, I'm going to walk you through the 5 clear things to consider before you make the leap, plus why 2025 might actually not be the problem. So on today's episode, is 2025 a bad time to retire? We're going to talk about the truth.
We're back on Your Retirement Elevated. Walter Storholt alongside financial advisor Scott Dugan, who will lead us through once again to discuss important financial and retirement planning topics. And this is a big one today, Scott, because I think a lot of people who maybe had this date circled on their calendars as retiring 2025, or let's even include the 2026 folks in there, as they may be feeling that train coming down the tracks pretty heavily toward them. They're starting to wonder, do I need to rethink things? Do I need to kind of pull out of this plan to retire this year? So I love the ability to frame the discussion that way, and I'm looking forward to how you might be able to help us out.
Definitely. And I tell you, the first thing, we'll go through the 5 things to look at. I'd say if you're doubting your ability to retire, I think that actually says more about your current plan or lack of plan. Because these are certainly things that we talk about with our clients that are getting, prepared for retirement, and really make sure they've got a solid understanding of what they need to do, what's doable, what's probable, and not letting the whims of the what's going on in the media and the markets. And sure, sometimes you do have to make some adjustments, but I think it says more about maybe the lack of planning, or maybe not a comprehensive plan that's truly there to give you confidence and let you spend predictably is probably not in the picture.
Yeah, it's one thing to just kind of say, stay the course, but it's another to kind of go that next level and truly look at maybe how are things shaping up for you in 2025 so far. What's the best way to analyze where you stand and move the ball forward? So as Scott said, we've got that list of 5 things that you can either do, think about, or just maybe questions to perhaps ask yourself or your advisor if you have one, to see if you're on the right track or if adjustments need to be made. But first things first, Scott, and our first tip and point for folks is to stay calm, don't panic, and to start with an assessment, but from a calm perspective, right?
Absolutely. And again, you got to step back from the headlines and start with your own situation. And what are your variables? What are your resources that you have? What have you saved? What are your guaranteed income sources, like Social Security? Do you have a pension? Do you have a good grasp on what it really costs to live the lifestyle that you want to live? Because really, if the markets and the drop in the value of your retirement funds, if that is giving you pause, whether you should do that or not, again, you may not have a grasp on all the variables. So again, making sure, asking that question, when do I want to retire? When is if you could wave a magic wand, when would that be? Again, looking at all your resources that are out there. And again, it should be based on a solid plan and not panic. Now, I understand if someone's suddenly retired or they're getting a buyout, it's, out of the blue, that's a different story. I completely understand, when it's not your desire or your actions that are pushing you to think about early retirement. But if you have control and you have, the ability to really dictate when you retire, again, stay calm, look at all your resources, make sure your plan is there, and make decisions that are based on facts and logic, not emotion and the apocalypse du jour.
Yeah. The panic approach would be, oh, there's no way I can do this. I'm just going to push off retirement. And that's what we don't want people to do. So start with that assessment first. That's the panic decision, to just automatically assume anything when it comes to your plan, but especially just pushing that date back.
Yes.
Okay. Makes sense. The next step, the next thing that we can do is to know our risk exposure. Risk is something we talk a lot about on this show, Scott, and there's a good reason for that.
Absolutely. And we definitely want to understand the difference between risk tolerance and risk capacity. And, we talk about that acronym CAN: capacity, attitude, and need. So that capacity is, what is your capacity to absorb that? How do you psychologically see those volatility, ups and downs of the market? Some people see it as a huge buying opportunity. Some people, their account's down $1 and it's a bad day. And so again, that capacity to absorb those things. In your attitude, again, are you ultra conservative investor? Are you a risk taker? And then really, what's the need? Do you know what you need your portfolio, your plan to produce as far as growth to make everything work and to account for taxes and inflation? So capacity, attitude, and need. And in our firm, what we want to do is determine what's the smallest or the least rate of return you need to make the plan work mathematically, and then work up from there. So you want to have that baseline. And again, you got to, as you approach retirement, what is your ability to absorb, those losses or that volatility? Because volatility is just the change in the value of your accounts. Risk is, do you have risk of losing the principal forever? And so two different things. And we're going to have a whole nother episode about that coming up. But again, make sure that your portfolio matches your current stage of life. And if you've won the game, if you've saved all the money that you need to get into retirement, then you really have a decision to make. Do I want to continue to take on as much risk, or do I want to dial it back? What is my situation, and what does that dictate? So again, know your risk exposure, but ultimately know how you feel about risk and volatility, and make sure that's all dialed in.
Okay, beautiful. So great point so far. Don't panic. Start with that calm assessment. Know your risk exposure. Third thing you can do is diversify wisely. And this one's really important because you didn't just stop, Scott. It's saying diversify. We want to diversify as wisely. There's a deeper purpose behind this.
Absolutely. And so again, what's diversification? It's a couple of things. It's about, we have a wealth plan that we use, but it's about having multiple baskets with a lot of different eggs spread around those baskets and people watching those baskets, right? That's diversification. And the thing about diversification is there's always going to be something in your portfolio that you're disappointed in. Everything is going to work magically all together. So that's
again, like you're very much keeping it real there, Scott. Yeah.
It's like we always say, there's going to be something we're going to have to apologize for. But if you look at the track record of the different sectors, there is no clear winners every year. So again, we've got to be diversified. And so balancing that out, do you have money in those different buckets that we talk about? In our wealth plan, we talk about the Jetson family and a lot. And in this example, the Jetsons have saved $1.3 million. You can see to the right-hand side, their risk number is a 55. That's their risk score. So from 1 to 99 is the range. And so 55, obviously right there down the middle. And so in their example, they wanted to keep about $100,000 in their emergency fund. And so that's always going to be liquid, safe, and really covers 6 to 9 months of essential expenses and any maybe big purchases. And so in this example, they wanted to have that roughly $100,000 always available. And then they decided, hey, we want to have our income be fairly consistent in retirement. So you see that protected bucket and that income bucket. There's about $700,000 between those two buckets. And here's what that's designed to do. In that green bucket, the protected bucket, that's going to produce about $40,000 a year in cash flow for at least the first 10 years. And so that's going to be a dependable income source. The other $300,000 in the income bucket, that's going to supplement that guaranteed income out of the protected bucket. So between the protected and income bucket, they're really going to solve their income gap for the foreseeable future, next 10, 15, 20 years. And in that red bucket, that growth bucket, that's money that they're probably maybe never going to touch. It's money to dip in if we have a roaring market for a few years, maybe take some chips off the table, take a couple extra vacations, something like that. But that's really long-term money that they may not need to touch. So again, 4 different baskets and eggs in each of those baskets. Now, we do not have a cookie cutter approach here at Elevator Retirement Group. So everyone that we sit down with, we're going to dial this in and customize it for each individual situation, and make sure that as we go on, it's not just a retirement income plan, it's retirement income planning. So once we've got those bases covered, then we can layer on all the other tax management and tax minimization. But again, this is true diversification, making sure that, again, you've got things in the right place, in the right order, and a good plan to withdraw money throughout retirement.
Great points across the board. That's why we've got to make sure we're diversifying and doing it wisely. Love the Jetsons example there. And I want to refer to that one more time, Scott, because for folks who are looking at this on the YouTube channel and able to see this visually, this is all customizable. So that risk number is going to be different for the next family that comes through. Obviously, their total portfolio and even the percentages and the dollar amounts correspondingly will all be different and customized to their needs, their expenses, the things that they're going to kind of need to work through in their retirement years, right?
Absolutely. And that's what we've developed. I'm doing this, going on 25 years, and we've developed this process to walk people through, help them identify what type of investor they are, what they need their portfolio to provide to them, and how do they want that income delivered to them. Do you want it consistent, predictable, or are you okay with a little variability, or are you somewhere in between? Again, we'll walk you through that process and get this dialed into exactly what's a perfect fit for you.
Is your retirement strategy working as hard as you are? Get the answers you deserve with Elevated Retirement Group's information-packed toolkit. Inside, you'll get Scott's book, Exceptional Retirement, along with essential insights covering the 5 key areas of retirement planning, strategies to keep more of your hard-earned money, and how to choose your winning retirement team. Take control of your retirement today. Click the link in today's show description to claim your toolkit at no cost to you.
Okay, excellent. Again, if you want to, we've got 2 more tips to give you, but in the meantime, if you want to take advantage of a review of your portfolio with Scott and the team at Elevated Retirement Group, it's very easy to do that. We've got contact information on the screen for our viewers. It's also listed in the description of today's show for everybody, whether you're listening on your favorite audio podcasting app or watching on YouTube. So check that out. You can always just go simply to listentoscott.com as well. Lots of resources, more episodes, and contact information there for you on the site, including links to just book an appointment right from your smartphone or computer. So we try to make it easy on you. Let's get to number 4 here, Scott, and that's to remember that retirement is a long game. Let's not panic, kind of referring back to number 1 here, I suppose, about some of these short-term blips on the radar. Let's keep that long-term, that zoomed-out view.
Mm-hmm. Yeah, and I'd say definitely refer back to some of our market volatility, market history videos that are up on this. I think we had 6,500 people to watch the last one, so quite a few people tuned into that. Retirement is not a finish line. It's hopefully a decades-long journey for you. And so you're not going to spend all your money at once. In a good plan, you're turning the tap on and you're pulling a little bit of money out on a monthly basis, quarterly basis to supplement your Social Security, your pension, whatever it may be. So again, we want to focus on the sustainability of the plan, not just the short-term performance. Because in the short term, volatility is going to look like this. But over the long term, things smooth out. And that really leads us into our number 5, and we've kind of foreshadowed this, but really focus on your income sources, because retirement is not about a number. It's not the magic number, those old ING commercials. People, what's your number? Sitting on a park bench, they're carrying it around.
They're very memorable commercials.
Very memorable. And ING's not been around for a while. Yeah. And that they've been around, but they've changed multiple times. But again, retirement is about income sources, a dependable paycheck. And the reason people get nervous when the market's volatile or we see inflation or there's uncertainty, because it's about the uncertainty of continuing their current lifestyle. Inflation is really the erosion of your purchasing power, which erodes your lifestyle. People don't want to change or give up their lifestyle in retirement. And so again, lifestyle is about your income, whether it's your Social Security, your pension, pulling money from your investments, whether it's your stocks, fixed income, annuities, CDs, rental property. Those are what fuels your month-to-month, day-to-day living. So if you're fortunate enough where you measure, hey, between our 2 Social Security checks and pension, that equals our outflow to live our life, then the market turbulence, big deal. You're going to be just fine. But if you've got 2 Social Security checks and you've got to take a pretty good chunk of money from your retirement nest egg, well, if that value is going up and down all the time, that can make people a little bit nervous. So again, it's all about how you put that plan together. And again, always have a smart place to take that monthly income from and smooth those things out. And again, that's what we see. People have successful retirements. especially in focusing on that go-go period of time, that first 10 years or so in retirement, that's where you want usually the most amount of certainty to be able to do all the things you want to do while you're still feeling great, get out there, knock all those things off your list. That's what people really are focused on. So again, 2025 might feel uncertain. And again, there's some people that are extremely concerned, maybe because of where they align politically. Some people are maybe a little over enthusiastic about it. Most people are somewhere in the middle, but that doesn't mean it's a bad year to retire. So the real question is your plan ready, and are you ready? And that's where, like Walter talked about, giving us a call, going through our discovery process, finding out, are you prepared in the 5 critical areas, whether it's income planning, investments, tax, healthcare, and estate. Are all 5 of those pieces in place so you can confidently retire, start receiving a monthly paycheck from your investments, and start doing all the things you've been delaying as you're getting prepared for retirement?
Again, if you would like to take advantage of going through that discovery process and seeing if you'd be a good fit to work with Scott Dugan and the team at Elevated Retirement Group, all you have to do is go to listentoscott.com or click one of the links that we have in the description of today's show. We've got a couple of different ways that you can connect, ask a question, or book that time to visit. So don't hesitate to check all that out. In the meantime, if you're consuming today's episode on YouTube, please give us a thumbs up, click the subscribe button so you don't miss an episode in the future. It also helps this content get out to others who may find it helpful as they prepare for retirement and their financial futures as well. Scott, thanks for the help, and we'll talk to you on the next episode.
Looking forward to it, Walter.
All right, we'll see everybody next time right back here on Your Retirement Elevated.
This video has been prepared for educational and marketing purposes only. The information in this video is general in nature, does not constitute personalized investment advice, and does not provide a complete analysis of the subjects discussed. All investments involve risk, and different types of investments involve varying degrees of risk. There can be no assurance that any specific investment strategy will be profitable or suitable to you. Additionally, although information presented in this video is believed to be factual and up to date, we do not guarantee its accuracy. You should consult an attorney or tax professional regarding your specific legal or tax situation and should consult a professional advisor before implementing any of the strategies mentioned in this video. Investment advisory services are offered through Elevated Capital Advisors LLC, an SEC-registered investment advisor affiliated with Elevated Retirement Group LLC. Registration as an investment advisor does not constitute an endorsement of Elevated Capital Advisors LLC by securities regulators, nor does it indicate that the firm has attained a particular level of skill or ability. Insurance advice and products may be offered by a third-party insurance producer, which may be affiliated with Elevated Retirement Group LLC and Elevated Capital Advisors LLC. Walter Storholt and Third Wheel Media LLC receive compensation for their assistance in preparing and hosting this video.